Dear students and working accountants, welcome to my Smart Tally Break class YouTube channel. Today we are going to take up day 5. Okay, yesterday we completed day 4, and before we proceed, so I have a request for you, all the students or accountants. First of all, you subscribe to my channel and click the bell icon and select all so that you will get notification for every video I upload. Before that, before coming online live, so you will get a notification about the video which is coming live. Every day, 8 o'clock, a video will come live. Today, one day Telugu, the same topic in English the next day. Like that, every day you get exactly by 8 o'clock in the evening. Okay. And you subscribe and then you share with all your friends who want to get training in accounting, or are working. Most of the accountants now still they are working in ERP9 only, it's only updated or it's only outdated. So the present is the for Tally Prime. So it is the most advanced and very simple, very is advanced version of the Tally. So and when you are viewing the videos, to watch the video till the end. Don't skip the video because you will miss a lot of information in that topic if you skip the video. So watch the video till the end. Suppose even if you close the video after some time, and after some time when you are coming online, again you watch the video from that point so that you do not miss anything. Okay. Coming to the point, coming to the subject. Yesterday we will go to the screen. We will go to the screen. See, yesterday in the day number 5, the day number is check out. This is day 4. Sorry, the day 4 yesterday we completed regarding the trail balance. We learned about the trail balance. So how do we do the trail balance? First we will record the transaction journal. From journal we will post it to the ledger and we will balance the ledger accounts. Then we will take all the balances in the ledger accounts to the trial balance. So till then we completed in the last class. Now on the basis of the trial balance, we go further and we prepare the final statement of accounts. Final statement of accounts or final statements of business. So final statements of account means the final reports, financial reports means for carrying on the business for 1 year or for some period. What is the result? What is the result? Means whether you earned profit or sustained a loss. So that is called the result of the business. You have to find out the result of the business as well as you have to find out the financial position of the business. Financial position means, so what are the assets we have, what are the liabilities we have, how much you have to receive from others, how much you have to pay to others, how much is invested by the proprietor. All these will be shown in the statements. So there are 2 statements to prepare. One is to find out the net results of the business, and the other one is to find out the financial position of the business. 1 second. So sorry, financial position of the business. For that, we prepare the statements. So the first statement which we prepare to find out the net results of the business, That results of the business is called the profit and loss account. Net results of the business means we have to find out what is the profit we got or what is the loss we suffered. So okay, that is why this is called profit and loss account, because we find out the profit or loss. So it is called profit and loss account, but it is papered into person. That will come later. And next one. So all the profit and loss we will find out by transferring all the nominal accounts. So when transferring the nominal accounts, that means expenses, losses. Profit or loss means difference between expenses and losses, and incomes is only the profit or loss. So we have to transfer the all nominal accounts to the profit and loss account to find out the profit and loss. Here we have to note one point. I told you in the beginning, goods. In the case of goods, what I did, goods account we never record in the books. It is changed. The name is changed. We enter in the name of purchases, sales, etc. Because when the goods are coming in, when they are coming in, they are purchasing, they are coming in. When you sell the goods, goods are going out. That is why we are changing the name and taking the into account. And that also we can use the real account school. Debit what comes in, debit what purchase means goods are coming in. Sales means goods are going out. But at the end of the year, when I prepare the final accounts, then again we will change it. The name will be the same, but we will take them as not as real accounts. We take them as nominal accounts, because purchasing and sale is the main business, and we get the profit or loss from the purchase and sales only. That is why these purchase and sales are taken as nominal accounts also. Purchase means we are purchasing goods by paying money, or on credit also. It is expenditure. When you are selling the goods, you get profit. So it is called, in the sales are called incomes. So the purchases account taking as, we have to take as nominal account, and we have to take it as expense account, and in sales we have to take it as income account. That's why. But the rule, even if you apply real account rule or nominal account rule, result will be same. Purchase account means goods are coming in, we are debiting. If you take it as nominal account, purchase means expenditure, so we have to debit. Both are same. That's why for the final account purpose, we take them as nominal accounts. So all the real nominal accounts, that is expense and incomes, will be transferred to the profit and loss account, including purchases and sales and returns also. Returns will be reduced from purchases or sales. That's right. So that is the profit and loss account, the first part. So here, the name itself indicates the profit and loss account means it is an account. Account means there will be two parts, debit and credit. And also, this is the profit and loss account. We are finding out profit and loss by transferring the nominal accounts, all expenses and incomes, to the profit and loss account. So all nominal accounts are transferred to that to find out the profit and loss. So the profit and loss account is also a nominal account. That's why all the expenses will be debited on the profit and loss account. All the incomes are paid on the profit and loss account. So debit expenses, credit incomes. You write that. Find out the difference. The difference will be the profit or loss. On the credit side, we are writing profit incomes. So incomes are more than expenses, then it is called profit. So credit will be more. So debit side we write profit. The difference we write, you tally that. So difference we write, and we call it as profit. If the expenses are more than incomes, then incomes, the expenses are more means debit will be more. Debit more means debit will be total, and we write the difference on the credit side. It is called loss, because expenses are more. It is called loss. Okay, this is regarding the profit and loss account. It is an account, and also it is a nominal account. So it has debit and credit two sides. This is about the first one. The second one will go later. Okay. So the final statements of account are also called, these final statements, they are also called final accounts. We call them final accounts consists of trading and profit. What is the trading? I will come next one. Next topic is the trading and profit and loss account, and next one is balance sheet. The second one is balance sheet. First we will learn about the first statement, then go to the second statement. So trading and profit and loss account shows operating results of the business. What is the result? You got profit or loss? operating results of the business, which means profit or loss for a particular period. So for carrying out business for a certain period, for 1 year, from April to March, or for half year from April to September, like that. For a particular period, for operating the business, for doing the business, the net result is called profit or loss. That result will be shown in the profit level for a period. The balance sheet shows the financial status of the business and a particular date that will come later. First, we will take up this. First, we will take up profit and loss. I told you already. In the profit and loss account, we find out the profit or loss. But this profit and loss account is prepared in two parts. The profit and loss account is prepared in two parts because one is when we manufacture goods, we pay some expenses. The expenses relating to the manufacturing. Depends on the manufacturing. More manufacturing, more expenses. Less manufacturing, less expenses. They are called related to manufacturing. They are called direct expenses. For example, when we purchase the goods, we purchase raw material and we manufacture goods. So if you purchase and if you manufacture more goods, we have to purchase more raw material. So expenses will be more. If you manufacture less, purchase will be less. Exactly. Where for manufacturing, we have to pay charges for the labor. Labor is working in the factory. So labor charges you have to pay. So if there is more production, labor charges will be more. Otherwise, labor charges will be less. Like that, all the expenses related to the production or trading, are called direct expenses. And direct incomes there is only one direct income, that is sales. And when you purchase manufactured goods and sell them, you will not sell all the goods. So there will be some stock. See, in the beginning, last year, there is some stock that you have taken into the trade balance, like that. If there is a stock at the end of this year also, that is also to be taken in the trading account. So sales and trading account. Sales you are taking, purchase you are writing on the debit side. So on the purchases or manufacturing of goods, including the direct expenses, still there is some stock is remaining. So then you have to reduce that production. That's right. On the credit side, we have to write that stock also. Only sales and stock we write on the credit side. On the debit side, we write all the direct expenses. This one part, total profit and loss account. This is one part. The first part is called trading account. The first part is trading. We will trade in one account only, everything, not two accounts. One account only, but the first part is called trading account. And the profit or loss which we ascertain here, so we can calculate the profit or loss. That profit or loss is called gross profit or gross loss. Now we take up, see here. This is called the trading and profit and loss account of Excel. This profit and loss account we are preparing to find the results for doing business for a particular period from April to March, like that. So for that period, this is the profit or loss, not for one day. That is why for 1 year period ending with this date, up to this date, last 1 year, that is written as for the year ended 31st March. So trading and profit and loss account of Excel for the year ended 31st March. So with the date for the last 1 year, this is the operating results. So we take up the first part is trading account. So first we take the opening stock, closing stock of last year. We take into this. Then purchases we write, and returns we have write on the credit side. Purchase debit, we are writing on the debit side. Purchase returns are credit, write on the credit side. But we should not write like that. Returns are related to purchases. So from the purchases, we have to reduce. So purchases less returns means purchase returns. We write, and net purchases we write here. And all the direct expenses are factory expenses. Factory expenses like factory rent, factory electricity, labor, factory insurance, etc. are any other expenses. For purchasing goods, when you purchase the goods, you will pay some freight or lorry charges or transport charges for bringing the goods. That is called, we call it as freight charges, or what you call freight inwards. Okay, so these freight charges, transportation charges, All these are also direct expenses related to purchases. They are also entered here. Like this, we did all the direct expenses after opening stock and purchases. Then on the credit side, we write only sales. In that also have written returns. Sales less returns, we write the net amount of sales. And then closing stock. This is the all the total expenses for manufacturing. And this is sale. This is sale. But we will not sell all the goods which manufacture. That's why the stock we have right. Reduce the expenses. So to reduce the total manufacturing cost, we write on the credit side. What is the cost of the goods remaining? So that we will write, and then we will balance. So you see which side is higher. So if the debit side is higher and credit side is higher, it means incomes are more. So if incomes are more, we will do the total amount. The difference is right on the debit side. This is called profit because income is more. This is called profit. Suppose if expenses are more, incomes are less, then expenses we will total. That difference is right on the credit side. That is called net profit. That is called loss. This is profit. This is loss. So this profit or loss which we get an account of manufacturing or trading only, not all the expenses. Only on account of manufacturing or trading. This is called gross profit or gross loss. This part, the upper part, this part is called trading account. This part is called trading account. So upper part is trading account. The next part is profit and loss account. Totally we call it as trading and profit and loss account, or simply we can call it as profit and loss account. So profit and loss means trading account and profit and loss account. So that is called gross profit or gross loss. That is carried down to the next part. That profit or gross profit or gross loss is taken to the next part, profit and loss account, and next part will start with the gross profit. So here the trading account, gross profit carried down. If it is a loss on the credit side, gross loss carried down. And in the down portion, that is in the part of the profit and loss account part, this gross profit which is carried down, that is written on the credit side. Debit side we are writing carried down. On the credit side, we write profit, gross profit brought down. The same amount we write here. If it is a loss on the credit side, there is gross profit, gross loss carried down. That is written on the debit side. Gross loss brought down. So we start with the gross profit or gross loss, and all other expenses, all indirect expenses not related to production. If direct expenses means if the production is more, expense will be more. If production is less, expense will be less. But in the case of indirect expenses, whether the production is more or less, these indirect expenses are not connected with production or trading. That's why they are called indirect expenses. For example, office salaries. If whether the production is more or production is less, we have to pay the fixed salaries, not like labor. Other expenses, printing expenses, stationery, report charges, all this we have to pay irrespective of the production or trading. That's why these are all called direct, indirect expenses. Similarly, we have some indirect incomes also. Commission received, indirect incomes, commission received, discount received, interest received, all this. So the indirect incomes will be entered on the credit side. Incomes, indirect expenses will be entered on the debit side, and in this part at the end we find out the profit and loss. The difference between the debit and credit, expenses and losses. If the credit side incomes are more, we write the difference on the debit side. The difference is called net profit. Previously it was gross, now it is net, real profit. This is the real profit, net profit, because incomes are more. We write on the debit side net profit. Suppose if the debit side is more, expenses are more, so incomes are less, on the credit side we write by net loss, and we write the difference here. Understand? So net profit or net loss. This net profit or net loss, we will take it. Net profit will be take, the proprietor will take, owner will take, one owner or many owners. Owners will take the net profit. Net loss, they will sustain the losses. They will bear the losses. That is why this net profit or net loss is transferred to the capital account of one proprietor or capital account of many persons. They are called partners. So in the case of one proprietor, transferred to capital account or transferred to X capital account. If it is more than one owner. In the case of partnership, partners. Net profit transferred to capital accounts, A capital, B capital, C capital, right in the upper column, or the division. That is as per the agreement, as per the agreed proportion. They will have partnership deed. In the partnership deed agreement, partnership agreement, they will mention what is the profit sharing ratio. As per that ratio, we will debit the profit or loss that we write in the inner column. The respective amount, total amount we write at the here it is 1,89,520. If it is divided, 1% may get 80,000, 1% may get 30,000, 1% may get 70,000, depending on the agreed ratio. Like that we will write. This will be taken to the capital account of the proprietors, owners. Okay. So this is the trading account and profit and loss account will come. After preparing balance sheet, trading and profit loss with the nominal account and balance sheet is only a statement. Trading account shows gross profit loss on manufacturing activity, and profit and loss account shows real or net profit for the operations of the business. So, all that. So, here. So, all the nominal accounts, including purchase and sales, treated as nominal accounts here, but it was final, are transferred to this trading and profit and loss account. All direct expenses related to production or trading are taken to trading account part, and the balance will be the gross profit or gross loss, and indirect or office expenses will be taken to profit and loss account. The difference between the indirect incomes and expenses is the net profit or net loss. This net profit is enjoyed or net loss will be borne by the owners only. Since trading and profit and loss account is an account, it will have debit and credit. It will have debit and credit because I am saying it is nominal account and it is an account. It will show debit and credit will have, and we will write type 2 and 5, just like a ledger account. Debit side 2, credit side 5, 2 and 5. Okay. So here show trading account and it will have debit or credit sides for showing the expenses and incomes. But the next part is balance sheet. Balance sheet is not an account, but it is it shows only assets and liabilities. All the remaining real and nominal, real and personal accounts only it will show. That is why it is not an account, it is only a statement, summary of the assets and liabilities. That's why it's called balance sheet. So it is not an account. That is why it does not have debit or credit, but to buy. It will only display only liabilities on the left hand side, and assets on the right hand side. Both are expenditure here. See, this is the pro forma of the profit and loss account trading. I told you already. Next, balance sheet. After trading and profit and loss account, all the other accounts means even the personal accounts will be taken to balance sheet, which is an account but only a statement of account, and liabilities in the financial position. The form will be like this. Here, this is the result of the business for carrying and business for 1 year. So up to one date, the 1 year period, that is 31st March ending 1 year period. That's why we call it as for the year ended. But here it is called as balance sheet of X and O as on 31st March, because the financial position will change every day. Tomorrow, yesterday it will be different. Today there will be some more transactions, it will change. Tomorrow some more transactions, again it will change. That is why balance sheet is not fixed and the balances and the position is not the same. That's why what we are doing is, on a particular date, what is the position? On the last day of the year, when we are making the final accounts, on that day, what is the position? That's why it's written as on or asset or asset. As on or asset, that was March 2022. The balance sheet, it is also divided into two parts. Left hand side liability, right hand side assets we write like that. But here, these liabilities we can write as capital and liabilities also. This is called as property and assets also. Right. So on the right hand side, all the assets. Assets means all the debit balances remaining in the trail balances. There are some expenses transferred to profit and loss account. All other debit balances will be transferred to balance sheet. Similarly, all the incomes are created, all credit balances all the incomes are transferred to profit and loss account. Other credit balances will be transferred to the liability side of the balance sheet. Okay, so here that is not transferred, shown here. So that will be there in the books. These nominal accounts will be closed by transferring to profit and loss account, but all other accounts will be showing balance. They will be carried forward to next year. Only these real accounts and nominal accounts, real accounts and personal accounts only will be taken forward to the next year. Okay, here. See here when I am writing, there is one tradition we follow. On the liabilities side, first we enter the liabilities to the proprietors, liabilities to the owners. So what is the liability to the owner? Capital account is the liability, and also suppose we may keep some profit aside as reserve. That is also profit. Profit belongs to owners only. But you are naming as reserve since it is kept aside. The reserves also belong to proprietors only. So capital account, any reserves, etc. All this will be shown first. So here we will show the capital. What is the balance at the end of last year? And then this profit will be given to him. That's why profit will be added to the capital. If there is loss, that loss will be reduced from the capital. And then comes the balance. If he has any drawings, that is drawings means taken from the business for his personal use. When he is bringing, we are writing capital, creating capital. When he is taking, we are debiting drawings account. The drawings also will be reduced from the capital. The net amount of capital we will show in the outer column. This is the net amount of capital. Last year, it was 5,25,000. This is increased to 6,39,520 because of the profit. And then after the liability to the owners is completed, then we write the liabilities to outsiders. See here, loan from Bangara. We are writing this is liability. Sunday creditors, all the creditors total here I write. The trial balance, all the creditors and debtors, individual accounts we write balances. But in the balance sheet, we write only the summary of the balances. But the auditors what they do, they prepare a schedule or annexer. In that they will show the details. So the Sunday creditors, details of Sunday creditors, they will write all the details. What is each and every creditor and amount balance of amount. But here we write the total summary balance. Here we write. Similarly, on the asset side, first of all, depending on the permanence, see fixed assets will be in the business for a long time. They are permanent. Still they are sold out or still they become useless. They are useful in the business. That's why first of all we will show all the fixed accounts, fixed assets. Then we will show the current assets. So fixed assets means land and machinery, furniture, computer, land and building, etc., etc. Here also we will show the balance at the end of last year in the inner column. Suppose if any asset is again purchased in this year, that will be added. And from that, what is the depreciation for that asset? The depreciation will be reduced and the net amount will be shown in the outer column for all the assets separate. But sometimes the auditors what they do is fixed assets, they will do the net amount, total amount they will give. These details, every details will be given in a schedule. That is another annexer, fixed assets, land and building, what is the amount, what is purchased in the year, sold in the year, and then balance, what is the depreciation, what is the net amount. They will prepare a schedule. So in that schedule, they will give all the details and the total amount summary, they will do fixed asset, this is the amount. Details will be found in the annexer. That is the, and then current assets changing every day. Sending stock in hand. So stock at the end of this year, which we showed in the trading and profit loss account, in the trading account part, we showed stock on hand or closing stock of this year. The same amount we showed in the balance sheet also. So here in the trial balance, whatever account is there, we are showing either in the trading account, the profit loss account or balance sheet on place. But closing stock, it is not for this year. Closing stock of this year is not shown in the trial balance. It is taken into account when we are preparing the final accounts. So means we have to enter debit and credit. Here we are crediting. That is profit and loss account, trading account we are crediting, and balance sheet on the asset side is debit. Debit and credit, both we are showing. All others we are showing in once because already it is cost. This is the entry that is the closing stock is taken into account at the time of preparing the final accounts. That is where we are writing both. We have to give effect to debit and credit. Credit in the trading account and debit is shown in the asset side. And then sundry debtors, cash in hand, what is the cash balance? Then State Bank of India means it is current account. Here it is, suppose any OD account show on the liability side. This is State Bank of India means it is a current account for the business. Okay, so it is a current account, right? And then completely the total, both the sides must tally. Everything is perfect means both the sides must tally. If they does not tally, so we committed mistake somewhere in the journal, it is correct, but then maybe error may be in ledger, it is correct, balancing, it is also correct, then we are taken to trade balance, there may be error, it is also correct. In such a case, in the final accounts, we are preparing the trading and profit and loss account and balance sheet, there may be error. Because in the trading and profit and loss account, if you commit any error, that profit will be change. The profit will change. In such case, the profit will be brought into balance sheet. Then if the profit is not correct, balance sheet will not tally. So the balance sheet must tally with this, and this, after preparing this, the profit and loss account balance sheet, this will be submitted to the management or the proprietors. They will see these reports and they will take decisions why the business, how the business is going on, what is the position, financial position, how the business is going on, why the business is going on, what is the problem, to rectify the problem, and if the business is going well, still they will search for the reason, for the things, how to develop still more like this. All the decisions will be taken on the basis of the final reports. And if the final reports are not correct, they cannot take correct decisions. That's why who will prepare these final accounts and all these things? Auditors and accountant. Auditors and accountant. So if the accountant is a perfect, knowledgeable accountant, everything will be good. Otherwise, this will not be good, and owners will not, cannot take any decisions. So you must, your aim is also to become a perfect, full-fledged accountant. So you must have full knowledge. Then only you can be a full-fledged accountant. Okay, now here, see here, all the nominal accounts will be closed, we transfer to trading and profit and loss account, including sales and purchases. That's why trading and profit and loss account is also a nominal account. So then all the remaining accounts means all real accounts and personal accounts will be shown in the balance sheet. The balance sheet is only a statement of assets and liabilities, but there is no debit and credit. So it is only statement of assets and liabilities. So there is a debit and we have to understand all assets are debit balances, all liabilities are credit balances. So with this, so this is the end of the final accounts. And with this, the fundamentals of account is over. But what I did is, in this accounting, there are many terms are there. They are called accounting terms or accounting terminology. So this accounting terminology is necessary either in the manual accounting as well as computers accounting also. This is necessary. That is why I extended one more day for the accounting terminology. So we will take day 6, I extended. In the day 6, we will take a format of we will take a accounting terminology, or they are called accounting terminology or accounting terms. So for this purpose, I have taken some terms, the terminology, and I have taken terms. We will find out the meaning and examples of the terminology or accounting terms for day 6. That I extended one more day. So in the next video, day 6, we will take up the terminology. With this, our today's topic is over. But still again, I am requesting you to subscribe to my channel and click bell icon, then select all, then share with all your friends, and watch all the videos till the end and like the videos, and definitely whether it's good or bad, you post your comments in the comment section of the video. Okay, and then one more thing I want to clarify. I am staying in Hyderabad in Kukatpalli. So these videos are uploaded regularly every day, 8 o'clock one video will come. Today Telugu will come, tomorrow the same topic will come in English. So both Telugu and English videos will come every day by 8 o'clock. Yesterday missed by mistake, it was published by 12 o'clock in the night. That is before that. Okay. And every day by 8 o'clock, the video will be, I will upload in advance. They will come live at that time only. Okay. So you can wait. And all the videos from basic to advanced, each and every topic I will cover. And then some people, even in the institutes also, they are not covering all the topics. Some topics they are skipping, and some topics they are just telling like only theory part, just like theory part. They are not showing how to make the entries, what is the very accounting treatment in Tally Prime. They are not showing. But now I will show you everything, and I will show you live also. I am actually practical accountant. I am working. So after completing that, I will show you how to file the GST returns. This Tally Prime, I will open in the Tally Prime directly how to make entries, and after that how to file the entries also. I mean returns also. I will show live in the portal that is called the government website for GST called GST portal. In the portal itself, directly I will show how to file in live. Okay, so you will get full knowledge. Still, some people, before that, it will take some time to know all the things. Some people, they may require, they may wish to have some online classes separately for them, or some online classes, I mean offline classes like classroom, face-to-face offline classes like classroom classes. They may also require some people, because if it is a offline class, so I am explaining. Suppose if you got doubt, so immediately you can ask me and I will explain that. Okay, so it will be beneficial to them. That's why if they require like that, also I will provide. I am providing the online classes as well as offline classes also. The fees will be that evening. But all these videos are free completely till the end. But in the case of this live class, I mean online classes or offline classes, they are not free classes, they are paid classes. But the fees will be very moderate, not like the institutes. They will not give full knowledge, still they charge more also. My fees will be very moderate to you. So if anyone want this offline or online classes separately, you can contact me. I have given my contact details, that is mobile number and email address in the about section of my channel. Go to the about section where you can get the email address or my mobile number. You can contact me so we can make arrangements. I will take up the classes also. Okay, with this today's session, I mean day 5 is complete, and my suggestion is after completing 6th day, we are entering the, I mean, we are going to the Tally Prime. In the Tally Prime, we have to make lot of practice only, then only you will learn. So simply, if you hear me many times, you will feel very happy. But then, when you are doing independently, you cannot do that. That is why making practice is very, very important. So for making the practice, you require a laptop or desktop. I will show you this starting. How for that you require Sally software also. So how to download the Sally software, how to work with it. Even though without license also, we can work to learn this. So for learning the Tally Prime, you can work without license also. So how to download, how to install, how to activate that, and how to work with that, and how to practice. I will tell. So along with this knowledge, you can practice everything. You have to practice many times. You have to practice many times, then only you will get the perfect knowledge. So if you got, when you are practicing, you can see the same video many times to make the, to get the good knowledge and to practice it very well. So in the meanwhile, still there are 3-4 days. This is over. Again, 2 more videos for 6th day. We will learn English. So 2 days means 26 and 27, I think, 28. After that, I will enter the Tally Prime. By that time, you require the Tally laptop or desktop. You make it ready and be ready for Tally, for learning the Tally. But you get a very good knowledge from my channel without any expenses. You need not pay anything because it's completely free. Because I am 67. So my idea is I have to teach the students, I have to give my knowledge to the required people also, if they require. If you are interested, then I can tell you. If you are not interested, I cannot do anything. That's right. That's my idea. That's why I am giving the I am uploading all the videos for you. So what I did is, what I told you, keep in mind and follow this, all the suggestions, then only you will become a perfect and very intelligent and full perfect accountant with full knowledge. Okay, so be careful and be safe, and practice well and become a good accountant and wish you all the best. Thank you.